What's going on YouTube? It's Chrome Trades with you guys with a brand new vid on how to identify the trends. Identifying the trend is one of the most important things that you know about when it comes to day trading. There's this famous quote that says you can't trade against the trend. Never trade against the trend, guys. But how do you know what the trend is if you don't know how to identify it? So this is what I'm here to teach you guys. It's fairly easy to understand, so you guys shouldn't have that much trouble with it. And I'm going to explain it pretty good. So here it goes. There's two types of trends in the market. There's a bullish trend and then there's a bearish trend. A bullish trend is when the market is going up and up and up. And the bearish trend is the opposite, when the market is going low and low. A bullish trend creates these things we call higher highs and higher lows. What is that, may you ask? Well, basically is when each candlestick creates a wick, a bottom wick and the top wick. If the wick is higher than the previous one, that is going to be a higher high. So right here, this is a higher high because it's above this high, and this is a higher low, which means because it's above this one, and this one's a higher high because it's above this one, and this is a higher low because it's below this one. And then when it comes to bearish trends, that it's when the market's going down, they create lower highs and lower lows. So right here, this high is lower than the previous high, which is this one. So that makes it a lower high. And this low right here is lower than the previous low, which is this one. So that makes this a lower low. Alright? I'm going to show you guys how it looks like in the actual charts. So right here, in this New York session, we have a bullish trend. How do you know it's a bullish trend? Well, because as we just learned, the market is creating higher highs and higher lows. The bottom of the wick of this candle right here is above the previous one, which is right here. Sorry. So this makes this a higher low. The high of this candlestick is right here, and it's above the previous candlestick, which is below here. You can't see that. Okay, so this makes it a higher high, and the market keeps doing this. You know, next candle higher than the previous one, and the low higher than the other low. So another lower low. Keeps doing this. Keeps going, and then it gets in kind of this mode that it's called isolation, where the market's not really going nowhere. It's really not in a bullish trend or a bearish. It usually happens between the Asian session and then the London session, and then the New York session always has the most volatility. So that's really where you want to trade. So over here, we were in a bearish market. Why? Because we're making higher lows or lower lows and lower highs. So this high right here is lower than the previous one, so it makes it a high. This low is below this one, so what does that make it? A lower low. Alright, and it keeps doing that. The next one, where's it at? Oh, right here. So what does that make that? The lower low. And the high is below the most previous one, so where does that make that? The lower high. Get it? It's simple. It's really simple if you really think about it. Well, if you just start day trading, I know it was kind of complicated for me at first, but you get used to it. And this happens, this is in a 1 hour time frame. When you want to identify the trend, you typically want to go into higher time frames because it gives you a better look at the market. Like in the 1 minute, it's a lot different than it would be on the 50 minute. You see? But you can always still identify the trend. And this happens in futures, commodities, forex, options, crypto, stocks, everything. We'll find the trend on gold here. Alright, we're on the 15-minute time frame, so let's switch over to a 1 hour time frame. Right here, this Friday, or this New York session time. Right here. Where's this high at? Or this low? Is it higher or lower than the most previous low? It's higher. So what does that make it? A higher low. The high. Is it higher or lower than the most previous high? It's higher. So what does that make it? The higher high. Okay? The next one? It's up. Let's move it. Higher low. New one. Higher high. What's this trend called? It's a bullish trend. Okay? Let's look for the bearish trend. Right here. It's quick. Let's find it quick. This high. Is it higher or lower than the most previous high? It's lower. So let's make it lower high. The low. Is it lower or higher than the most previous low? It's lower. So let's make it lower low. Next one. Is it above or below the most previous low? It's below. So lower low. The high, above or below the most previous high? Below. Lower high. So what trend is this? It's a bearish trend. Okay. That's pretty much it. That's how you can identify the trend. Next video is how you can tell when it breaks structure. So what I mean by that is, when can you tell that the market trend has shifted between a bullish trend to a bearish trend. Alright, so thank you guys for watching this video. Subscribe, leave a comment, leave a like if you like this video, and tell me what you guys want to learn. Alright, Chrome Hearts out. I mean, Chrome Trades out. Edit that out.